Sashi Krishnan, CIO at Birla Sun Life Insurance, is now joining us. Sashi, thank you so much for taking out time for us this morning. In 2014, if we would have asked you, would equities be a great year, you would have said that expectations are high, but you are positive. Right now, what would you say? Expectations on all front are low, and still you continue to be positive on Indian markets?
Yeah, so we continue to be positive on Indian markets, but I think the good thing is that expectations have come to a lot more realistic levels. So when 18 months ago there were very high expectations, but today, especially if you look at the media economic review which the government has put out, I mean there's a lot more of the middle path that they have embraced in terms of keeping expectations reasonable. But I think going into 2016, I would be very positive for a couple of reasons. One, obviously, is the fact that macro stability has returned and continues. And if you look at, except for possible pressures on the fisc as we go into next year, because a 3.5 number seems to be difficult, except for those possible pressures on the fisc, I think on the inflation front, on the current account deficit front, on the plan expenditure front, I think there's a lot of stability. The second thing that I think we're going into 2016 with a lot more positivity in terms of the fact that the investment cycle has turned. Gross fixed capital formation has improved, for 3 quarters. And the government has been able to find budgetary resources to put back into plan expenditure. And I think we'll have a strong revival in the investment cycle next year. And thirdly, I think, we're seeing, fairly strong signs of urban consumption reviving. And I think urban consumption will remain strong through 2016. So I think we go into 2016 with, a fairly optimistic view.
Right. What would be your view on earnings? The expectations after the 3-4 quarters of cut that we've seen continuously now are, can India Inc. meet that expectation, or maybe another 2 quarters of cuts you expect and then probably an upgrade coming in?
So I think earnings have bottomed out. And my own feel is that, as we go into the first quarter of 2016-17, maybe the next quarter would still be, a little subdued. But as we go into the first quarter of 2016-17, I think we will see commodity prices, bottoming out. And, you have to realize that, a large part of, this demand destruction that happened in the economy was because commodity prices fell so much. And once those have bottomed out, I think you will see a quick renewal in, revenue growth. Secondly, I think, if you go into 2016-17, margins will also start improving for a large number of sectors, especially given that the advantages of the commodity price drop have already started getting reflected. So I would be fairly confident that you should see earnings growth recover to something like around 13-14% by maybe the second quarter of 2016-17.
Right. The Fed rate event was much anticipated in 2015, especially in the second half. It has happened. Probably they are going to hike again. Do you see that positive for flows into emerging markets, that the event is behind? Or you would wait and watch for how many hikes happen for 6-8 months and then probably decide as to how flows would come into emerging markets like India?
So from what I can read into this, I think one is that the Fed rate hike had to come. I mean, I don't think there was any doubt. The markets were not, sort of doubting whether this would come or not. I think what the markets are reading into the Fed rate hike is in terms of the pace of the increase. And I think, the signals seem to be that the pace will be reasonably slow and there won't be a quick pace of increase, which I think the markets have taken very positively. I think more importantly is the fact, and I think what most overseas investors will be looking at is how the, rupee dollar behaves. That the dollar will strengthen, there is little doubt as we go into next year. But if we have an event like, say, the renminbi being depreciated, it will obviously have some impact on, currencies like India. But once that is behind us, I think there will be very strong flows back into the Indian market, because an overseas investor, once he sees that the worst is over in terms of the rupee depreciation, will sort of start coming back into Indian markets. But having said that, I think, domestic flows have also been very, very strong. The mutual funds have gotten something like $11 billion. The insurance funds still continue to get in money into ULIPs, a large part of which is getting into equity. And therefore, I think, you'll have strong domestic flows into equity markets through 2016. And I think the retail investor has understood that, at these kind of valuations with the, Nifty at something like 7,500, 7,600, I mean, it's a very good level for them to enter, especially if they are long-term investors.
Right. Also, you would also appreciate the shift that has happened because a lot of money is coming in via mutual fund and insurance, which means that, experts like you are trying to take a call which name to be underweight or overweight on, rather than retailer coming out and putting in the market by himself.
You're right. And therefore, I think, wherever there's fair value and we see, significant improvement as we go into 2016-17, we will definitely buy into. For example, if you look at the NBFC space, the BFSI space, the banking space, I mean, valuations have taken a fair amount of hit. But, most of the bad news is already there in the price in terms of, the provisioning that needs to be made, in terms of the, stressed asset situation. And we know that, all the people who are, who have a stake in this, including the banks, the Reserve Bank of India, the government, are doing whatever they can to sort of improve that situation. And solvency will get addressed as we go into 2016-17. And therefore, where you see value out there, you would obviously like to, take positions out there. Similarly, the investment cycle. We're seeing a revival, as I told you, in gross fixed capital formation. And a lot of these, plays on the investment cycle, especially the capital goods side, the cement companies, they are at very, very good valuations at this point of time. And therefore, wherever we see opportunity out there, we definitely like to take advantage.
Right. Coming back to the FII flow point. So domestic is taken care of. Domestics have supported the market so far, and probably 2016 looks to also be a decent year. About FII, especially in the last 3 months, we've seen a majority of selling coming in, even in India and the other emerging markets. Fed hiked, and next day we saw a 600 crore plus number. Friday markets were down, but still the FII number was just about 5-6 crores. And today also looking in at the market, you get a sense that FIIs are not selling majorly, looking at the Dow Jones on Friday or what some of the other global markets are doing. Any risk on rally globally, and India would be the biggest beneficiary?
See, I think the risk on rally will take some time to come because as much as first of all, you have to realize that there is fair amount of uncertainty in terms of global demand. So global demand has taken a hit that's reflecting in our own export numbers. And this Fed rate event had to happen. But I think as we go into allocations in 2016 January, my own feel is that when people look around the world for growth, they will find that there are very, very few pockets where you have growth. And therefore, India will get its fair share of allocation. I think people will obviously look for, a currency play out there. And once they're satisfied that the currency play is behind them, I'm very sure that there will be allocation from global funds into India. You also need to realize that much of the selling that has come because the Arab sovereign funds especially, have been very, very big sellers. They're redeeming much of their money into, ETFs and other global funds. And, once that part of it gets sorted out and oil sort of settles at wherever it settles, I think, there'll be a lot more money coming back into emerging markets, India especially.
Right. As far as the overall ownership of FIIs, it had largely been a FII-driven market. But with the 3-4 months of selling, you think FII ownership in India is lower, and that risk is also lower in 2016 versus at the start of 2015?
Yeah, I think, FII ownership in India, I think needs to be looked at, through a very different lens. You have to remember that most of the FII money comes into the MSCI index, which has got something like 75 stocks. So it's a very, very concentrated investment. It is not across the broad market. Whereas if you look at mutual funds and insurance companies, they invest across the broad market. And if money has come down, it's obviously come down, in some of these large cap stocks where the FIIs have sort of invested in. And the good thing about, these large cap stocks is that both from a corporate governance perspective and an earnings certainty and visibility perspective, things are fairly okay. So, when money comes back, I think, those stocks will recover very, very quickly. And I mean, I don't see a very, very big impact on markets on account of whatever FII selling has happened till now.
And the crude point that you were making, when the budgets of 2016 are made for some of these crude producing nations, you think a lot of flows can be expected outside emerging markets, including India?
See, I think the problems that many of these crude producing nations would have had is that most of these people depended on oil surpluses to fund their budgetary spend. So as they get into the new year, they will obviously look more closely at their budgetary spend. They will, I do see reports that some of these countries have started imposing taxes. and trying to raise revenues through other means. And therefore, I think, the kind of shocks that we had of them withdrawing from some of these funds may be lessened next year.
Right. The one more global talking point, which is China's slowdown. How big an impact would that have on India?
Well, I think the China slowdown and its impact on India seems to be, not a very tenuous relationship, because, in terms of both being trading partners, I don't think India and China are, such large trading partners that it will impact India. But yes, the Chinese slowdown obviously has a larger impact, because any depreciation in the renminbi makes China more export competitive, and we have seen our own export markets sort of contracting over the last couple of quarters. And therefore, we'll have to watch that very carefully, because I think global demand pressures are going to impact us a little bit, and we'll have to watch China very carefully in that regard.
Shashi, we've spoken about the markets and how things can do, but how should one essentially play? IT, a lot of concerns have been said, and after the Chennai floods also, we've seen a lot of guidance downgrade coming in or profit warnings coming in. You think an ideal time to be overweight on IT, looking at the price?
Yeah, so I think the immediate price correction that you've seen in IT has primarily come because of some of these calamities that we've had in the recent past, and the fact that many of these guys would have had, there will be an impact on some of the large players who are based out of Chennai and other places. But if you look at it from a medium to longer term perspective, I think I would think that you would see margin improvements gradually coming back into the IT sector over the next couple of quarters. And that, I think, is the opportunity for us to look at. And as the rupee depreciates, which I do think will happen, gradually over the next couple of months, I think these guys will benefit the most. So, whereas we are more or less equal weight in IT, we will look for opportunities in some of the, market leaders over there to take exposure as we go ahead.
Right, but cloud, the impact over there, the impact of sales not growing, probably now the base becoming too big for some of these large cap names. You think those are concerns which are well priced in?
Yeah, I think as far as the model is concerned, I'm sure many of them will have to move away from potentially what is an offshoring model into looking at other opportunities like cloud, like mobility. They've been talking about it for a couple of quarters. I think there is greater momentum in a lot of these areas. And I'm sure, from whatever we understand of them, they are all on the top of that. So I don't see that as a concern. And we have seen some of the large cap names actually doing fair amount of work in that space.
Right. Talking about the technology wave, another wave has been, the wallet money or, the digital money that we are seeing. You spoke about private banks earlier, and, it has been a favorite for last 2 years of most of the funds. You think there is a risk to business model to some of the large cap private sector banking names?
So if you're talking about, the small finance banks and the payment banks, my own feel is that it's a little too early to, even try and sort of predict how things will work out there. Most of them won't get into operations before, if I'm not mistaken, August, September next year. And I think, the model is still a model that needs to be established. I mean, both the small finance banks and the private banks. That, from a longer term perspective, especially the small finance banks, as they move into become universal banks, will clearly take some part of the market. There is no doubt about it. And the fact that many of these people who are at least the small finance banks were, microfinance players, and they have access to, the small saver, the very small, customer, means that you will have more financial inclusion, which is good for the, the banking system as a whole. But we would like to, put our money right now in the private sector banks, because we do think that, a lot of what is the problems in these banks are out in the open. We know exactly which are the sectors that are under stress. We know how they're going to deal with it, whether it is 525 or whether it is writing off or whether it is restructuring of the power sector assets. We also know that, from a capitalization point of view, most of these banks are, in a very, very reasonably positioned. And as the investment cycle, sort of takes off, I think some of these corporate lenders in the private sector bank will start doing well. And therefore, we would like to, play that space, and we do tend to be overweight in that space at this point of time.
And the recent correction is a good opportunity to enter into private sector names?
Yes, I think so.
Right. And about the public sector banks, the underperformance over there, even that has to stop one day. They can't just continuously underperform. Are valuations there looking in attractive, or you would want to wait and watch for numbers to get delivered?
Yeah. So whereas there could be select names that we would look at in the public sector banks. Obviously, we're not going to look across the entire spectrum of public sector banks. But I think yes, we would like to watch those banks for a couple of more quarters to see exactly how a lot of what has been announced in terms of how the banks will be managed and how solvency will be provided for. Because you also need to realize that with fiscal pressure on the government, solvency is something we'll have to watch very carefully. We'll have to see how much money the government can actually put back into some of these banks and how that will change the fortunes of these banks. So we'd be a little more careful out there.
Right, but as of now, private preferred versus PSU, which has been the trade for the last 4-5 years, continues?
Yes, that would continue.
Right. How would you look at the auto pack? A lot has been spoken about M&M, the way the diesel price, the diesel ban will have an impact. You think these are, issues that one cannot predict, and as they come, the industry gets prepared for it?
From a broader perspective, I think one theme that we are playing is the urban consumption theme. And I think, many of the auto companies, I believe, will do well as we go into next year as urban consumption picks up. And we've seen this trend happen in the past also. We've seen this after the, for example, 6th Pay Commission award. A lot of the auto companies had actually fairly strong, couple of quarter sales. And I think this is going to play out in, after the 7th Pay Commission comes through. In terms of specifics, in terms of, diesel cars being banned, I think we need to realize that these are all temporary measures. I think both the Delhi government and the environmentalists have been telling us that it's only a question of 3 months, 6 months, where they will see how this works. Whether it is the odd even or it is the diesel ban, and therefore I wouldn't be too concerned about it. Yes, there will be some short-term impact, but my own feel is that this is a sector that will do well. And therefore, these urban consumption plays, in my opinion, is something that we will play as we go into 2016.
Right. And about the industrials, the recovery over there, a long due recovery, but nothing seems to be picking up except for a few sectors?
You're right, because the problem is that private capex hasn't started. And therefore, whatever we've seen in the investment cycle, this increase in gross fixed capital formation over the last 3 quarters has primarily come because of the government capex. And the government has put in something like 70,000 crores in terms of additional plan allocation into a lot of the infrastructure sectors. And this is a catalyst. We ultimately will have to see private capex coming back to have a sustainable investment cycle. And my own reading of this is that sentiment has changed and people are a lot more confident. And the ease of doing business has also improved fairly dramatically, and therefore my own feel is that you will see the investment cycle taking off, and we would like to play some of the themes in the investment cycle. Cement, for example, is a theme which I think will work out as we go into 2016-17. Some of the industrials in this space, and ultimately I think even the utilities, because as the power sector reforms actually take root and some of the state electricity boards are in better financial shape, I think some of the utilities will also start performing.
Right. Within the infra pack, roads, defense, a lot has been spoken, railways, where we've also seen a pickup. Even the prices of some of these companies have done quite well. You think still a lot of execution is remaining there? I mean, a lot can be expected in terms of returns from these companies?
Yeah, you couldn't have said it better. I think the issue over there is not money. The issue over there is execution. Right? There is fair amount of money that can actually get into infrastructure, both from the government and the private sector, and even from many of the global infrastructure funds. But what we need to see is execution. And I think where we are seeing big execution happening at this point of time, or at least there is some visibility, is in the road sector and possibly in the rail sector. And these are two areas where we are seeing execution. For example, in the road sector, we moved up to something like 18 kilometers of a road per day. The government has an ambitious target of getting to 30 kilometers of road per day, and I'm sure we'll get there. But as we see this execution improving, I think the opportunities out there will also start improving quite a bit. The second, obviously, will be in the power distribution and transmission sector, because very clearly the intent is to set this in order. And if you can get the financials out of the way and ensure that tariff rationalization happens and transmission losses are reduced as we go through 2016, I see, many of these companies also doing well, the people in the distribution and transmission space.
Just a last word on the pharma pack, Shashi. US FDA, we've seen for Sun Pharma, not taking names, of course, we've seen for Lupin earlier. These are bellwether companies with sector-leading valuations. You think what happens over there, does US FDA continue to be as strict as there has been? That is a big concern to earnings, or markets have started to price in that for any company before giving it any good valuation?
Yeah, I think 2015 has been a bit unfortunate for many of these pharma companies, specifically because of the kind of FDA observations that have come through and the warning letters that have come through. Difficult to say how 2016 would go, but I think valuations of many of these guys will also get impacted because you could have larger health spends in the domestic sector. And domestic demand for many of these guys are picking up quite steadily. And I think whereas global demand does get impacted a little bit because of these events, my own feel is that as we go to 2016, these companies shouldn't do too well. At least some of the bellwether companies will sort of recover.
Right. Shashi, thank you so much for taking out time for us. Always a pleasure talking.